What a start to a brand new week. You're listening to the Smooth Breakfast on Smooth 98.1. This is your love music, love live station. It's 32 minutes past 6 a.m., 7th day of April 2025. My name is Ayokunmi, and it's that time to get into the world of business on a Business Express, taking a look at the stories that are shaping the business world. And in just 15 minutes, we'll get through quite a number of things. Well, one of the things we're talking about is Donald Trump, and of course, the 14% tariff slapped on Nigeria. Joining me this morning to take a look at this, give us a little bit of better understanding of what that means and what to expect. Chidaalu Nkwocha, she's an analyst with Afrinvest Research and Consulting. Very good morning to you, Chidaalu. Good to have you on the show.
Good morning, Ayo. Thank you for having me back on your show. Hope you're doing well.
Yes, I'm doing good. Trying to, figure out exactly what this means in terms of the tariff slapped on us by Donald Trump. But before I get into that one, for you listening to us out there, you can join us on YouTube on one hand at Smooth 91 FM Lagos. And yeah, we're streaming live right there. You can also send a message in on WhatsApp on 0809 440 981. Okay, so as I mentioned, and as we all know, in case you did not know, Nigeria was hit with a 14% tariff from the United States. Crude oil makes up the bulk of our exports. What do you think the impact will be on Nigeria? Bearing in mind, Donald Trump has decided to channel his inner Oprah Winfrey and just slap tariffs all over the place. You get a tariff, you get a tariff. Well, Nigeria wasn't spared. But what does it mean for us?
Okay, first of all, the tariff was a reciprocal tariff. So prior to this, the Nigerian government was charging the US, I think about 27% for imports from US to Nigeria. So the 14% tariff slapped by Donald Trump to Nigeria was a reciprocal tariff. So it means that, and part of his whole propaganda, like when he was re-elected back as the first sixth president of the United States, part of his whole agenda was to reduce drastically the price of crude oil. But then with these tariffs, energy, some sectors are excluded, like energy sector. I mean energy sector means things like crude oil are currently excluded. But now looking at it from a demand side, so demand and supply side dynamics, there's this fear that the tariffs will slow down economic growth in advanced countries. I mean, IMF came to say that it can slow down the GDP. The Ngozi Okonjo-Iweala last week, that was Friday, also mentioned that could also slow down the GDP. So, and Trump's main objective too is also to reduce the price of crude oil, and he wants America to be producing more. So we're talking about now from crude oil perspective. So currently
Right.
talking to you now, I think I see Brent crude oil is currently trading at $65 per barrel. That's the lowest it has been trading since 2021. I mean, 2021 was when we were coming back from the recovery of the COVID-19 spillover
Mm,
effect of 2020. So since 2021, prior to now, so the Brent crude oil price had not dropped to that percentage, but now it's trading around $65 dollar per barrel. So for Nigeria, this means like two things for Nigeria. um the FX reserve is going to see pressure, and then
mm,
revenue. So Nigeria plans to raise about 19 trillion in oil, I think oil production, according to the budget that was 2025 budget. And based off this assumption, it plans to like increase production capacity to 2.06 million barrel per day, and oil should be sold around $75 per barrel, but it's currently
right.
not producing at 2.06 million barrel per day, no. And oil prices have currently dropped drastically. So as it stands now, Nigeria is going to we're not also forgetting the fact that other countries are now producing, not just Nigeria, other countries are now producing oil. So what we might face now might be the issue of what they call in economics dumping, because we might be trying to sell oil, because oil makes up, they used to say we are over dependent on oil. Yes, it makes up over
Yeah.
80%
Yeah.
of our total revenue. So what we may be facing now is dumping. We'll try to sell maybe at a lower price, compete with the international markets, and because we are trying to sell at a lower price, we will not be able to meet our revenue target for the year, and it's going to put us into more borrowings. I mean, we've been borrowing up and down. The borrowing is about to extend more with all this crude oil. Another part is the FX reserve. So 40%
Okay.
of our FX reserve comes from oil. And the fact, and if we're not getting the money from crude oil, it's going to put a lot of pressure on our FX reserve. So it's significantly going to like affect the Nigerian economy. And given the fact that it's also affecting global, if it's affecting the big guys, that's global economy, there's no way it's not going to have a spillover on us that we're just trying to develop like the Nigerian economy. So that's my take on the whole tariff issue.
Looks like some tough times are definitely ahead. You know that proverbial tighten up the belt. Well, we might have to get new belts at this point in time or extend the current belts we have because I don't know if there are any more notches to tighten right now. But leaving that really quickly so we can get through a couple of things in the time that we have this morning. Let's shift to the Nigerian stock market. Do you think that oil and gas stocks will be impacted by these tariffs, like the upstream firms like Seplat, for instance?
The Nigerian market does not work. Okay, yes, it can influence Seplat indirectly. I'm talking about their revenue concerns. If tariff prices are driven lowerly globally, then lower cash inflows could delay like drilling projects and expansion plans. So yes, it can influence it indirectly. And also there's also the issue of currency risk. I mean, the naira may continue falling. But coming down to the NGX doesn't move that way. I think the
Mm,
NGX moves by corporate actions and what I always call the big guys playing. So macroeconomic data like tariffs, inflation, unemployment, they don't move the NGX, the Nigerian Stock Exchange. I mean, we've had issues where inflation data will come out and inflation is going up, but the NGX is still trading bullish for that week. It's still trading positively. So we are not yet at the stage where macroeconomic data are currently moving the NGX. So it's not going to affect the stock market. It might affect production, maybe affecting Seplat's revenue in their financials. And then Seplat has been trading for over 5,700 naira since the beginning of this year, over that price. So I don't think this tariff is going to influence the Nigerian stock market. No, no, I don't think it's going to do that.
Okay, talking about the market, it was flattish on Friday, closing down 0.01%. What do you think the triggers have been that are impacting Nigerian stocks, looking at those numbers?
Okay. Like I earlier mentioned, the NGX is driven by corporate actions like dividend payments, right issues, and what I just mentioned, the big boys play. When I mean the big boys, the likes of the Dangote cement, the Boa cement, those people are
Mm,
drivers, Excel, MTN, those are drivers. So what is currently driving the markets currently as it stands now are dividend payments and corporate actions. I mean, a lot of, especially coming to the banks, a lot of banks are currently releasing their financials, and they've been doing so well over time. I mean, year to date is quarter to date. The first quarter of the year did over 2.7, if I'm not mistaken. If you compare it with last year, it's lesser than what it did last year because last year I think the big guys were playing the markets for the first quarter of the year. So it kind of like put pressure. And as an investor, if you don't know what's currently going into the market, you're just going to go and buy stocks because they are going up. You don't know what is going to, because Nigerians just most Nigerians when they trade on the NGX, what they want to get probably is probably dividends. But I think we are breaking into that point where people are currently actively trading. Oh, this stock is going now, going up, this one is coming down. People check like closing share prices of each day to see the movement along around the NGX. We are currently
okay.
at that, we're breaking into that point. But for now, I don't think the NGX is moved by all these stuff. So that's what I'll say about that.
Okay, so I mean, looking at how well you just referenced that the banking sector is actually doing, we've seen some impressive results in tier one and tier two space. So is it safe to say that banking stocks are looking attractive in 2025?
Yeah, they are. I mean, they have the highest dividend yield if you're looking at its per performance for those that release their financials. I think the likes of UBA is currently leading with a dividend yield of over 13.6%. You have Fidelity following with 10.5, Zenith 10.4, Wema 9.1. They have high dividend yield. They are very attractive. They made a lot of money. With all this FX pressure and all the rest, these people make a lot of money too from let's say from their dollar denominated assets too. So
Okay.
banking stocks are currently very attractive, and people say Nigerian has like one of the best banking system in the world. So prior to that, they have, and most of them have good. I think there's also the plan of recapitalization where most banks have already like most of the tier one banks have passed their recapitalization requirements. So banks are currently very attractive now. I mean, with the dividend they pay out, with how much they are earning, you can see people getting stocks, how much they are currently earning. So they are currently very attractive.
Hmm. Okay. Really quickly, I need to just find out about insurance stocks. I'm very curious about this one because, there seems to have been some chatter around consolidation that needs to happen within the industry. Very quickly, what is your own take on that?
Yes, there's a lot of noise around the insurance sector on the NGX, and for good reason, though. I think the general sentiment is that consolidation is long overdue. So NICOM has been trying to enforce recapitalization for a while now. And right now, many insurance stocks are trading below book value. But if this consolidation issue that these whispers are currently, if it kicks into place, we could see a significant upside in some of the insurance stocks like ICO, Mansard and the rest. So right now it looks a little bit of a value trap, but if this consolidation plans, this chatter, this little noise
Hmm.
by hearing around kicks off, we're going to see the value of insurance stocks.
Huh. Definitely looking forward to that one. Okay, as we round up the conversation this morning, we're done with the first quarter of 2025. Quarter two is up and running. What is your outlook for the market as we move on into the future?
Okay, so there is this, I think it's going to be neutrally bullish, but highly selective. I mean, but for the banking sector and the cement sector, they still have very strong stories to tell. They have current strong stories to tell. And because we are not, the NGX does not move with macroeconomic data. Like we don't have things like inflation pressure in the NGX. Mm, Maybe indirectly it does because in the parts where like, also we're also waiting for the CBN to see what they are going to do with rates. If they're going to hike, if they increase rates, sometimes too, if they increase rates, that's we have to see how yields in the fixed income too is also going to play up. But for now, it's going to be moderately bullish, and that's because currently now I think the yields in the fixed income markets are currently attractive. So investors are shifting to the fixed income market now, and then the most of the thing that shapes the Q1 performance for the NGX was mainly corporate earnings releases. That was
Hmm.
what shaped the market. We've seen banks release their financials, so we've seen how much they've made last year. So these things that are encouraging people to invest more in the NGX. And also if Q1 performance too turns out to be very impressive, or wait for Q1 performance, it turns out to be very impressive for some selected stocks. So it might also shape the NGX market for this
Okay.
for Q2.
Mm. All right. Thank you for sharing those thoughts. Gilbert Musa on WhatsApp says, considering the impressive results from some of the bank brands, when you consider individual participation in the NGX before 2009, when the NGX experienced a crash, and now has individual participation increased? I doubt. All right, Gilbert, thank you for sharing your thoughts. We really have to wrap it up this morning on Business Express. Thank you so much, Chidaalu, for joining me. It's been a pleasure having you on the show.
Thank you, Ayo. See you next time. Bye.
All right. Have a great, great morning and a great week as well. And thank you for being a part of the show. As always, keep it tuned to your love music, love life station Smooth 98.1. The show kicks on. There's more great music coming your way as we get along into the 7:30 hour when it's time to talk about what's going on in the papers on Freshly Pressed.